Stock market today. The analysis for October 7th, 2022. What happened in the markets? Nasdaq down 3.80%. S&P down 2.80%. U.S. Treasury 10-year yield up 6.1 basis points. Gold down 1.08%. Bitcoin down 2.98%. Oil up 4.64%. In other news, Binance cryptocurrency exchange hacked. Looks like 570 million worth of crypto was stolen out of there. It's not the first time that I've heard of some problem with cryptocurrency. Even going back to as far, I don't remember what year it was it 2017? Mt. Gox problem. You can look it up online to see exactly what it was. I don't particularly remember. I just remember the name and problem. Stocks fall on jobs report, and Credit Suisse to buy back $3 billion in debt. It's been an ongoing problem with Credit Suisse. Overall, there's ongoing problems. But you know what? You're not going to have a problem. You know why you're not going to have a problem? Because you were probably wondering, is the stock market going to be open this Monday, October 10th, 2022? And the answer is yes, it will be open. It's trading on Columbus Indigenous Peoples Day. So we're going to be in business for that. Speaking of other news, no stocks reporting on Monday, but over here at stocktwits.com/earnings-calendar, whatever date, this is a pretty handy thing for no cost to look at the earnings. The reason why is that Tuesday shows you all these companies that are reporting. Wednesday, so whatever date you go to. So this coming week, here is what's reporting. Is there JP Morgan, Wells Fargo this Friday, 5 more stocks reporting. I have to look at all those individually. But any stock that you're trading, it's good to know when the earnings are being reported. Even though they can change them around a little bit, but it's good to know, because it could potentially make the stock move differently, or you might want to do an earnings play. So check out that earnings calendar over at StockTwits. For our risk indicator, moved up. All right, we're back at 271.90 closing out the day, and you see we've had this just steady increase since I started graphing it here back in the ending of August. And we're creeping up towards that extreme level. 200 to 300 is in the high level of risk. 300 plus is extreme. So we're dealing with high level of risk. One of the factors that is used to determine this is the 10-year U.S. Treasury. So we'll look at that next. And then you have the Dixie, which is comparing the dollar, which is a currency, to other fiat currencies. 6-month line chart of the 10-year Treasury, and dropped down a little bit. During this drop down, I think that's when we had the stock market a little pop in the rally. But now those rates are moving back up, getting closer to that all-time high. And what happened in the stock market today? S&P 500 had a down day where we have more sellers than buyers, but you see we're still under this daily average. We really have low volume for the last almost this whole week. 1, 2, 3, 4 days. Did I really need to count that manually? Obviously I did. And we see we had a big big drop. There's that big drop. At least these pro charts, they tend to not do so pro-ish after hours. They're really lagging. Our volume should be popping in. But we still got this weekly stochastics been going down. Huge drop today. Now we're closed a little bit below this support line of 363.40. Volume finally got a pop up to the average daily average volume. However, it some negative, right? Unless you're shorting, you're doing some short positions, then it's positive for you. But as far as up or down, it was going down, big drop. So these stocks below here are ETFs of different sectors that make up the S&P 500. Now they're not all of them, but all of them excluding real estate, these are the highest weight. So we would expect these to be down or sideways generally. Let's look and see. And down. Volume's going to pop up in a second. Got the similar picture. Even though our weekly stochastic, it's time to potentially just be open to seeing some sort of bottoming pattern, potentially based on this. Although these stochastics are lagging indicators, and we're seeing some weak volume here. With the weak volume selling or buying, it's just kind of running out of momentum. To see what happens on Monday, but definitely down day. Even though we had some selling, buying, press it up just a little bit. So it caught support right in that 120. Consumer healthcare, we have huge down day. Gap down today below this resistance. You can see that price consolidation right here. If it's basically on top of it or below it, makes it be support or resistance. And still weak volume. We had one strong day of volume. Everything else has been below the average, and big down candle with some buying pressing it up a little bit here. A little more volume coming in, but that's to be expected by looking at the S&P 500. And hopefully this is going to load quickly. Consumer discretionary also dropped down. Volume still a little low compared to the average volume. That Pro 2 chart just been in this downtrend, which pretty much is expected. Financials. XLF, the financial sector, also had a down day, although the candle not as much of a wide move, but did drop down, kind of on the light on the selling volume. More sellers than buyers for sure, but we're still not getting that average daily volume. Pro 2 chart moving down. Real estate, also had a big drop yesterday. And a little bit of slowing momentum today based on this sort of like a doji-ish looking candle. Really got this wide range on the weekly stochastic that's below this 32% line, but doesn't seem to be slowing down. It can really stay down there lower and push prices a lot lower. Volume was weak also on that. IWM, the ETF representing the Russell 2000, we see even though we had a bump in volume compared to the last 2 days, still below its daily average, and a bit of a strong candle to the downside with the Pro 2 chart basically looking the same over there too. For the Qs also showing us down. Look at that. Boom. Volume really increased hit that daily average volume and bumped it up just a little bit, and getting a little bit of buying coming in right around this support here. Very down. How about the dollar via UUP? We have a bit of the opposite when we're looking at UUP. On the Pro 2, our weekly stochastic has been floating up here in this high range over the 80% for quite a while. Money has been flowing in, even though yesterday and today you can see that yellow, so it's not as much money flowing in, but there's still money flowing in. It's not turning red. Last 2 days rose up a little bit with this little bit of a doji-ish looking candle. Volume has been weak, but we're above all 3 moving averages, and what just kind of the tendency has been is when it gets down to the 25 to 50-day moving average, it's just bouncing up, and it's been happening like that for a while. Oil had a shot to the upside, right? Up a little bit over 4%. When we look to the left, and we closed above this 200-day moving average, when we look to the left, we're still in this price consolidation range, but it's like kind of here from 96, you could say right around there, right? 96 to about this 86, like this kind of $10 range, $10-ish, somewhere in there. So it's still in there, and it's not down here below the 82 anymore. That was quite decisively. Look at that. Look at these 3. This is the future, so it trades. It's not exactly like per day, but look at in the last candles that it closed. 1, 2, 3, 4. These 5 candles. We've got 3 of these really powerful bull candles moving to the upside. Gold dropping down a little bit. So in the last 3 days, gold is basically took back these gains it made over on this day, which, what day was that? The 4th, Tuesday. So here's our Tuesday candle, and basically lost all those gains. The tail of this candle testing the top of this, but buying brought it up in there. So now we're still in this range, right? It's kind of around the 1700 range. Bitcoin really doing the same thing, just going sideways, really weak. Like this, it's not too exciting to be trading this right now. So I don't know what's going on. What are some things that could be going on? It's definitely building. It's definitely building a base. Is it a base to go up? I don't know. It's consolidating. Is it getting ready to go down? Well, it's below the 200-day moving average. It's above the 20-day moving average, but it's below the 50-day moving average. So it doesn't really seem like strongly to the upside. These candles are super weak. Real just like weak, nothing really going. Maybe no volume. Doesn't really seem like anyone's really doing anything. And sort of, we can see the candles starting getting kind of less and less and less. I don't know, maybe the interest is kind of dying down. Who knows? If I was in a situation where I was trading, not investing in Bitcoin, but if I was in a situation where I was trading it, I would be prepared for a move to the downside, because I just don't see anything that looks like it's gonna go up at the moment. So I'd be prepared for a move to the downside. What would I have to see for it to start preparing for a move to the upside? Same thing that I've been telling you. It's gotta continue to close above 20,000, and it's not. I mean, it's good that it's closing above 19,000, but 19 and 20, it's a $1,000 difference. So it's below this 50-day moving average. See it right here, test the 50-day, couldn't handle it. Test the 50-day, couldn't handle it. Right here, it's close to the 50-day, can't do it. Look at that. It's really, really weak. Now it's boom, dropping down here. We'll see how it goes. But that's what I'd be prepared myself, be prepared for. And in order for you to prepare yourself, this is the S&P 500 on this line chart, going back to the max that Yahoo Finance will hold it, which is about 1993. I have these wonderful trend lines drawn here. Just ignore these bar things. I have no idea why that's on there. Doesn't really matter. We just want to see that we have this little bit of a trend, right? And this is starting at the end of 2021. So basically our bear market started kind of the end of 2021, beginning of 2022, however you want to kind of look at it. But basically for this whole year, we've been in a bear market. We're going on 10 months here. Now, over here, you can see this one lasted maybe a month, maybe 2 months, but each color differentiation is 1 year. So this bear market was relatively short, and then the rest of the year it turned bullish. Over here, you see that it started 2000, kind of mid, what is that? Sort of around getting towards the end of the year, mid, like, I don't know, 9th month, 8th month, so somewhere in there. But continue to go down during 2001, continue to go down during 2002, and then finally 2003 started rallying up. So the point is that it's possible that we could remain in this bear market for a couple of years potentially. And how will we know? Well, this little ball here, that is where the market is currently trading. And this line here, the first thing, in order to end this bear market, we have to get up to this trend line and go past it. And you notice here it did that. It went past it, but it failed. Same thing that happened here. It went out of, broke out of it, but it failed. Right here, it tested it and it failed. And there's other little times in here you can see where it you can see where it's rallying up and fail, rallying up and fail. So right now we have this rally up, and it's already kind of petering out. So it would appear that it's not having an easy time to make it up to this top of the trend channel. And if it does, you know, so be it. But right now it's not, and it's looking really weak. So I would expect it to continue to go to the downside. Where could it potentially go? Well, right now here's its low, about I don't know, what is that? Somewhere around 357, which might be one of your favorite numbers. Somewhere around in there, and could potentially test back there. If it tests back there and drop lower, where could it potentially go? Anywhere in here, anywhere where you see these some peaks and little valleys here where prices start getting congested. So I think it's real possible that we could see somewhere in definitely the lower, anywhere from like 330, 320, 340, something like that, and with possibly down to even as low as these like 300-ish, where we see like prices getting kind of caught in here, tested in here. But the reality is that, how low could it go? Well, it starts at 0 and then goes to 1 and then goes to 2, right? So is it possibly going to drop down to 1 or 0? Probably not. But for me personally, when I'm thinking about this, when people say, how low could it go? Well, if it's at 300 or if it's at 400, how low could it go? Well, zero is the lowest. Technically, it shouldn't go lower than zero, but in the oil futures market, what was it, 2 years ago, it went negative 40. So, there's first time for everything. But more than likely, it's not going to be dropping all the way down to like zero. 300? I could potentially see that happening because of you can see it right in here where it's happened before. But before it's going to do that, it's got some support right here at this 350-ish, let's say 350, 340, somewhere in there. And then again right in here around that 320, all these areas. But that's if it keeps dropping. I think maybe it could be going that far. How long would that take? What time frame? I have no idea. Right now, we really want to see, is it going to rally up to this trend line? And if so, what's going to happen? And right now, it's going up, but it's going up really, really weakly. Not weakly as far as 7 days, but weak as far as not strong. Right? But technically, here's our low. You could say this is a higher low. Basically, 3 days of gains wiped out in 1 day. So yeah, I'm still betting to the downside overall. If you're uncomfortable with anything, paper trade. Paper trade, it's simulated trading. If people tell you like, oh, it doesn't have real emotion and all this stuff, you're right, it doesn't. So at least you'll know which buttons to click to do certain things. And people that do this stuff with real emotion, they're like, oh, it doesn't have the real emotion. That's true, but there's a lot of things in life they would never say that about, like fist fighting. Maybe that same person saying this, if they wanted to learn how to fight, maybe they would punch a bag. Why are they going to punch a bag? That's not the real emotion of a fight. Well, obviously, you want to make sure your technique's down. So maybe before you jump into trading with live money, maybe take out the emotion and make sure you know what buttons to press. Because here's the other thing. When it comes to fist fighting, let's just say when it comes to like competitive boxing, more than likely, if you're in a real boxing match, like you're in a gym and you're going up against someone else who's in a different gym, more than likely you're going to be relatively equally skilled. Generally, right? And just like if you're sparring in your own gym, generally your coach is going to set you up with someone that's generally equally skilled. But that is not what's happening in the stock market. Have you heard of Warren Buffett? He trades in the stock market. So don't for a second think that he's not your competition. Have you heard of Ray Dalio, Bridgewater? They trade in the stock market. Anyone that you've heard of, if they're trading in the stock market, you have no idea that could be your direct competition. Right? No one has any love for you out there in the stock market. No one cares. They're just doing their trades. They have no idea who's on the other end of it. And you have no idea who's on the other end of it. You have no idea if you're trading against whatever, some algorithm from Goldman Sachs, or if you're trading against some hillbilly person like me living several miles, several time zones away from Eastern Standard Time, and I prefer to sleep instead of waking up early in the morning. So, maybe someone could say, oh, I've got an easier time of beating you. You don't know who you're against. So do some paper trading. Make sure you know what you're doing, at least in theory, and then start adding some of the emotion in. Go to iofsuccess.com. Download some free stuff. Download all this free stuff. I'll send you things every day. And I'm working on something that's all about paper trading. If you're a little reluctant, this should help you get some to be like, yeah, you know what? I can be man enough that I don't have to care what XYZ somebody on YouTube says about poo-pooing paper trading. I can be man enough just to paper trade. Or woman enough. Or whatever enough. You guys have a fantastic day. It's Friday night. Hope you go have some fun. Because I'm going to. Bye-bye.